down the hammer and pick up the pencil. You're about to listen to The Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
All right, ladies and gentlemen, boys and girls around the world. Yep, you tuned in to The Savvy Radio Show. It is a Friday, and I'm trying to get this podcast out today. But, man, I just had the amazing opportunity hanging out with a kindred spirit, someone that's synced not only with Jesus, if you don't know about him, let me tell you about him, but a musician friend, a performer, probably performed over, if you didn't know this, I've DJ'd over 1,000 weddings. I mean, it's just fascinating when you look back and, been DJing since 1992. How many events you could do. It's good to reflect. So I'm hanging out with an awesome friend of mine who is killing it as a real estate investor. And he's probably performed 3,000 events. He is a full-time musician / AKA flipper, but we're trying to get him out of that environment. We're trying to get him into residual income. And we are working on accounting, blah, blah, blah. So we have been bantering back and forth about how to hire an accountant. And so I'm like the lazy way. I go, listen to my podcast. And I sent him a podcast, and he listened to I can't believe he listened to the podcast. And I told him to listen to episode 170 and episode 224. 170 is a current accountant interview, and 224 is how to hire one. So he listened to these. He actually even confessed. I couldn't believe he confessed. He's like, I'm going to listen to these. He listened to it 3 times. I'm like, ooh, did I make some mistakes? So he's so cool, and I can't say his name because he's, record infringements, celebrity status. I don't want to get sued, But I was like, okay, bro, you got to get a new accountant, and you got to interview these people. And I could see his eyes glaze over, and I was like, you got to do this because you don't want to fail like I have. And I haven't necessarily failed. All my accountants have been phenomenal. I have just outgrown them, been slapped by them, and have conflicting issues in a positive way. It's just like I'm writing a podcast now about the first 3 years of marriage. It's like being on a river raft. It's kind of cool until the water slaps you in the face. Well, if you learn these skills right now, life as an investor will be 10 times easier. The gist of this podcast, wow, that is a long intro, is how to decipher if that accountant is for you. And so he will listen to those 2 podcasts. You got to go back and listen to them because you can get on his page. Is 170. Well, 224 is try to how to fire one. So he's in the process. He's outgrown. He can't keep up with his business of performing and flipping properties. So he's got to have some help. And he enlisted some help before, somebody that would just come into his office and kind of help him. And I was like, you got to stop that process because that's only hindering you. It's only because you're becoming blind to what this individual is doing. You've got to dig in. And this is only a temporal thing. After you get this ball figured out, you're going to grow. You're going to explode. And so he interviewed one already. He's kicked it around. I told him to call all of his friends, find out who they're using and why they're using them. So he narrowed it down. I was so proud of him. I gave him 1 week. He came back, and I started drilling him hard to the degree where we started sweating. I was like, okay, homie. He said the first thing that he learned right out the gate, he's like, I didn't bring anything to the meeting. Wow. Excellent. I didn't even know that, but he called an accountant up, scheduled a meeting, and just showed up. And it was like we're fishing with no fishing pole. So he learned real fast that bring your taxes, last 2 years of taxes, maybe your financial statement, and or if you don't have that, because that's why you're hiring this accountant to make a financial statement for you. Hopefully, if you can't, if you don't know how to make a financial statement, let me know because I'll try to help you out. I do have some templates to use, but also what his bank statements are, because this individual that he's fixing to hire needs to know your volume. A lot of accountants just operate off of volume. You in me as a real estate savvy investor, you're looking for an accountant that's going to grow with you, that understands every transaction, not because you write 300 checks to 400 contractors because you're this great flipper and it's going to cost you $100 more a month because you're doing more transactions. That's not the accountant that you're looking for. You're looking for someone that understands your business and really wants to help you grow. If you have 10 properties or 5 properties today, the questions on the table should be, how can we get to 300 properties without the bank knowing, because we got to do it conservatively, but how can I take losses, or how can I set my taxes up personally, or how can I create other entities so I could move money properly, maybe have one account separate for just flipping and then have a separate account that's broke for holdings, for repairs. So that's kind of the gist of why we're doing this in general. Okay, now this is labor intensive. Your flesh does not want to do this. You do not want to have a meeting with someone, especially if you're a rock star and you dress well and you have gel in your hair. You definitely don't want to sit across the table with an anal detail person when you have different color socks on and you don't give a rip. And only thing you want to think about is writing songs and performing this Friday. But you got to fight through this, and it's going to be deaf on ears, and that's okay. And I can tell you what classes to listen to or what videos to watch, but you physically have to sit in front of an accountant and get you got to get the gut feeling. Is this the person that's going to fight for you if you had an audit? Is this the person that's going to throw you under the bus because you are responsible? Ladies and gentlemen, boys and girls, when you give them this information, when they stand in front of the IRS, they're going to wash their hands. Well, this is the information they gave me, Your Honor, and this is what they'll sell you out, okay? And so we want to know why they're selling us out and how we can protect ourselves. Even though that accountant will fight for you, it's still, you need to protect your assets and what you're doing, and you want to be able to grow and grow as fast as possible. So I was like, okay, bro, sounds good. They said that they were interested in volume, how many transactions, so we can get a price orchestrated. So if you really want to get a price of what their services are, you need to find that out. She said, this accountant said that they have someone they work with are QuickBooks certified, and they can get a discount, I guess, purchasing QuickBooks. Okay. And I was very clear with this investor. I was like, listen, dude, I have QuickBooks. I never touch it. I plan on never going into it. You need to find someone that's going to set up your QuickBooks, and you need QuickBooks. Why do you need QuickBooks? Here's the deal. It's easy for financial accounting, things that you need to give to your banker to borrow money, aka P&L, depreciation schedules, right? You can make a P&L off a spreadsheet. You can do your financial statement off of a spreadsheet, but real average bankers that you're going to be dealing with in the beginning, they're going to want, hey, we need a P&L, or we need a balance statement, or we need your rent roll. Okay. QuickBooks just aggregates that information for you. That's not necessarily, maybe I'll do a podcast on managerial accounting because that's on my list to help my homie. But the question that he asked, QuickBooks, and the lady was like up front, yeah, we do QuickBooks. We'll set it up for you. Now, there is a specific chart of accounts you need to ask me later about for real estate that really takes your QuickBooks and makes it sexy. And so I got to pull that information out. I haven't done this in a long time, but you can actually Google this up. If you Google up real estate, QuickBooks for real estate chart of accounts, there might be a squeeze page or a web page out there for a couple bucks that will give you all the chart of accounts already. If someone creates a new chart of accounts for you, they're going to miss stuff. You really want to drill down on one property. What do you mean, VanCauwenbergh? You have this house. You may just classify, segregate the land versus the structure. There's several ways that you can do depreciation, and you can really see what your plumbing costs. You can break it down in your chart of accounts just for plumbing. Some people just classify everything on repairs. I may do that on my taxes, but maybe through QuickBooks, I want to know how many plumbing issues have I had. Do I need to buy a specific tool to save on drain outs because I know I need a new sewer line? Well, I can easily find that information out through my chart of accounts. Okay, so yes. So the first question is, yes, you need to know if they are QuickBooks authorized, or are they proficient, which 99% of them are, and how are they? Are they online with the QuickBooks? Do you require me to pay for the QuickBooks subscription? How does that work? Will I have access to that QuickBooks? And you need that information. Why? Because if you decide to outgrow this accountant, I don't want to say fire anymore, outgrow, it's really seamless to take that QuickBooks file. It's a QDP or QBD file, and anyone can upload it. You just need to have the password and that document, and you can get that online as well if you have the online QuickBooks version. Now, so I was like, okay, homie, so far so good. Now, I didn't start ripping them up until after I started trying to slap them around in a nice way, but I was like, what did it cost? She said $1,500. I was like, what, $1,500 to do your taxes? He's like, that sounds good. I just love you because what does that mean? It just a typical investor. It just sounds good. Okay, well, $50. Well, I squeezed out of him a little bit. I kind of like did some jabs. I was like, he told me it's $60 an hour for a bookkeeper. Ah, okay. Now we're getting into the numbers. And then he said, my next question was, is that $1,500 includes your taxes? And he said, yes, it does. See, we already have a discrepancy possible because I don't know how, I'm not sure what my homie's volume is yet, but $1,500 is just for my state tax. I'm just giving you a perspective. Now, but you boil it down, $1,500 is $125 a month for bookkeeping. Sounds reasonable at the level of he is like 7 units or 10 units. He does a lot of flips, maybe 1 or 2 a month. That sounds like a reasonable price just for your bookkeeping. You better make sure that's include taxes. Now, since you didn't have any information, the price is going to change when you go back there and show them the documents that you have this many transactions. Now, you're an individual. You outsource everything. I don't know. Now, here's the thing. So I'm like, how'd you hear about this girl? So then he gets into this whole thing that a friend of his is in a computer-based business and uses her. And then another real estate investor I was like, okay, but those two businesses, the other real estate investor just became a real estate investor. He owns a different type of business, a service-based business. Here's the thing. You're looking for an accountant that has solid history or clients. Let me hear you. Solid, working with real estate investors. So I didn't want to get too deep on that. So then we moved on to the next question. I go, and this investor is bomb. He came back and said, how did it go with the capital improvements versus repairs? And this was his response. I thought this was interesting. She says, I'm kind of aggressive, kind of conservative. And I was like, that's interesting. She said, I thought this was interesting. I'm very conservative on reporting income. I agree with that. I'm not opposed to that. I am aggressive on expenses. Now, this to me just sounds like two flippant answers. Now, listen, you don't want to be necessarily aggressive on expenses. It depends on what kind of expenses. For example, you jokers out there writing off your lunches all the time. That isn't an aggressive move, but the IRS looks for lunches because they know you're shady. So in my world, I do not write off lunches, or very rare. The law is very clear. It says you can write off 100% of a meal if it's catered in. But when you go to a business meeting, let's say, AKA your significant other, and a lot of people write that off, that's aggressive in my mind. So when she says aggressive, I would maybe drill down just a little. What do you mean by aggressive? Give me an example. The best thing you can ever say to an accountant is give me an example. Ask an important question. So then just for fun, I'm just hanging out with my homie because honestly, I don't even know this answer. I was like, dude, what's the difference between an S Corp and why is that so important? And he answered it beautifully. Well, I was helping another friend of mine and I emailed my CPA. My title of it was these two silly questions. One, what is an S Corp benefit over others? And 2, marketing purposes, can savvy investors sponsor me as a runner for a marathon? These are the 2 questions, because these are questions I set my corporate, and this is her response, and she is bomb, not the one that my friend interviewed, but she said this: the biggest benefit of why you choose an S Corp is to save on employment taxes. Amen. If you personally, the majority of your income is from rental properties, but you also have $500,000 or also have over $500,000 from other business activities, we don't have an S Corp set up. When you don't have an S Corp set up, you can be taxed as a sole proprietor or corporate. The sole proprietor is subject to 15.3% self-employment tax on top of your ordinary tax. The corporation tax rate can vary from 15 to 35%. But it passes through as well as kind of a double taxation. S Corps are passed through, my man had it right, to your personal tax return. But you can deduct employee taxes from their expenses at 7.65%. And she said, this is why we give you a salary. And this is why I am an employee, my only employee of my only company. Now, this is interesting. Now, remember my other question was, for marketing purposes, could savvy investors sponsor me as a runner? And I knew the answer, but this is interesting. And then she replies the next day. This is for real. Hopefully she doesn't listen to this podcast. She's probably going to fire me, but it's okay. She goes, for marketing purposes, savvy could sponsor someone else if they were to expect a significant gain from having that exposure. Now, this is where entrepreneurs differ from CPAs. I'm reading Rich Dad Poor Dad all over again, Cash Flow Quadrant. It's the words that they say that come out of their mouth. And that's why I'm trying to teach my homie to sit down and interview with these people, because it's the words out of their mouth. Are they a scarce mentality? Are they a business mentality and an investor mentality? You see, that's the main reason why, my brother, is why I brought you to die on the cross and go through hour of pain of listening to this nonsense, because of this. For marketing purposes, savvy could sponsor someone else, but here's the key words: if they were to expect a significant gain for having that exposure. What the F does that mean? Of course, you see how the line is gray there? And listen, when you're hiring this accountant, be very specific. Are they going to be fighting for you? Are they going to jump for you? For you personally, I would say no, because you are the sole member. Let me know if you have any other questions. Now, she said no. Now, interesting. Now, 2 days later, I got to give props to my girl, because, being my accountant has got to be ghetto, because I'm crazy. Oh, and so a day later, she goes, Steven, I rethought the marathon thing, and I think I would, in bold letters, take that deduction for yourself as long as you're branding savvy. It could include printing costs of T-shirts, entry-free. Now, listen, ladies and gentlemen around the world, I knew this. I'm an entrepreneur my whole life, okay? That's the difference, the language and what they're saying, and also the aggressiveness of expenses. And also you as trying to be sketchy. But here's the thing, the language for her, I expect a significant gain from that exposure. See, she's conservative because she's made and born that way, and to protect her law firm or her accounting firm for that. And I give that love for you. That's your business. Now, when we're standing before the judge, whose business we're fighting for? It's your business. Now, I respect this girl. How many CPAs would you know that would come back and make a mistake and say no? That's why she's on my team. That's why I love that chick. We're down. I'm not going to say your name. If you want to know her name, come holler at me. I'll give your phone number to her. They're expensive, but they're worth it to get what you pay for. So that brings me to this whole thing. You need to learn to classify before you get to the accountant. And you got to understand the process of this. And these are simple questions that if you don't know, you can shoot them by me. I'm not perfect. I've been doing this for 20 years. I knew that you could, but I still wanted to run it past her just to make sure, because Donald Trump is crazy and he continues to change stuff like you can't write off your own home interest. I'm actually writing a podcast that's coming out pretty soon on 2018 tax stuff. But the point is, you've got to understand what's classifiable and what's not. And you want to know this stuff before you get to that. And so before, what's a capital improvement to a repair? Now, there's a fine line there. And if you need to get that question out and ask that CPA, that's my number one deal breaker question, is what is the difference between the two and how do we really maximize that for the success of our organization? So you need to know that they're always going to play the safe role. Like I said before I read this, they're always going to play the safe role. And she went with the safe answer because there's not a significant gain for having that exposure. Well, what does that mean? There is. But how can you quantify that? And that's where the IRS will come in and crush you if you're like doing some weird stuff, okay? But now I got the green light. Guess what? Savvy Investors is going to sponsor me for the marathon. Hey, who wants to run a marathon with me? Hit me up. So let me tell you about why this is so important. So a long time ago, I was having a meeting with your CPA, and I definitely recommend you do that. Now, there's checks and balances. Here's a checks and balance that I have in my own organization. My property manager can make any decision $500 or less. She don't need to call me. My first layer of property manager. The second layer of property management, the one that manages the property manager, like that, the one that manages the property manager, she can spend anything up to $1,000. Boom. How's that sound? So you don't call me if it's $1,000 or less. You're competent enough. I trust you enough. You wouldn't be in that position. Make that decision. You really, as a CEO, as an entrepreneur, or on tour, or in the ministry, or whatever you're doing, you really don't want to get a call. Hey, the lady broke the window out. It's going to be $250. Do you need to change that window? Now, if you have a property management company managing your stuff, yeah, I'd probably have a lower $300 or less, and it needs to be through text message, and it needs to be very clear. But these people are, running this organization for me and blah, blah, blah. So one day I was sitting with my CPA, and I definitely recommend, and I don't do this enough, and I'm a hypocrite, but seriously, if you want to be a baller, try to meet with them every quarter for sure, at least once a year before, 3 times a year before you even think about taxes, and have a tax strategy. And I would say in the month of, guess, August. That's when you need to start freaking planning and preparing so you have enough to allocate or put capital improvements to rest or ramp up your repairs and what you need to do because of your tax burden, or you have to pay out your employment taxes, whatever that is. All right. So I was sitting down with these fine folks, and I was like, they're like, hey, I was looking at, you need to look at the numbers. If you don't understand the numbers, that's okay. A friend of yours will teach you how. Hey, there's a $16,000 deal. What the, and they're writing it off as a capital improvement. And actually that was a repair. If your CPA writes off a $16,000 confusion, bookkeeper, remember, they're always going to go the conservative route. And they wrote it off as a capital improvement. That would cost you money. How much would that cost you? Well, it would cost you taxed on $16,000, because anytime you spend capital improvement, that's considered income because you're improving the property and you have to pay tax. So that rent that you raked in, yes, your interest is a deduction, certain services are deduction, but you're going to have to pay that tax on 16. And if it depends on your tax bracket, you could be paying 6 G's. So that $16,000 could turn into $22,000. And it's dumb. If I classified it properly and I just wrote it off as a repair and it was an authentic repair, that would be written off my taxes. It wouldn't cost me $1. It would cost me what it needed to cost me. Well, and it also depends on your tax bracket. Anyway, hopefully, I'm not an expert. Hopefully this helps you. Hopefully this motivated you to do the right thing and spend some time. Do not fall like I did 20 years later And I'm just now figuring out this jazz. If you have some success, or you have one house, or you're thinking about it now, you ain't no detail people out there just getting it going. Listen, you don't have to get all too over the top on this, but you need to keep this on the back of your burner. Write down this episode and revisit it later. Get a kick in the hiney and grow. If you have a question, let me know. You tuned in to the Savvy Radio Show. We're actually going to have some financial people at Investor Weekend coming up. I'm super stoked. Actually, the homie in my room was the very first ticket that bought a ticket, which is very humbling. That even them friends don't try to get a free ticket. They don't realize it costs thousands of dollars to put this event on. That's why we're all jammed up, because we moved it to an awesome hotel and we got these 2 awesome speakers coming in, and it's not free. So you need to get your ticket today. It's early bird. It will go up in cost. We will smash you at the day of the event. Don't try to roll up at the Investor Weekend trying to get in for 100, because it ain't going to happen. But I'm telling you, if you got any value out of this one episode, hopefully it would save you $6,000 not paying taxes on capital improvement. You should go buy your $100 ticket today. It's $98. Go to investorweekend.com. Real simple. INF or INVSTEOR, investor. That's what you should be. Weekend, spell it WEEKEND.com. Get your $98 ticket. Call a friend. So we need to go this. We need to meet this crazy savvy landlord dude.
Investor Weekend is not far off, with over 10 information sessions to increase your portfolio. Log on to www.investorweekend.com. Whether you are a seasoned investor or never purchased a property before, you don't want to miss the Investor Weekend. Join us for a powerful, knowledge-packed weekend with over 10 informational sessions that are bound to enlarge your real estate investments. You will hear from the best national and local real estate investors that will share practical and relevant experiences with you, the investor. There will be several networking sessions to connect with other like-minded people for potential funding, partnerships, and yes, hot deals. Go to www.investorweekend.com. Did you know we meet once a month for the Landlord Lunch Meeting? The third Wednesday of every month. Go to landlordlunch.com.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook, and always be buying assets.